Hello, I'm Finola Burke from RaaS Research Group, and today we're focusing on respiratory equipment and consumables manufacturer, CleanSpace Holdings, ASX ticker CSX. Joining me to discuss the company's recent FY25 results and outlook is CEO Gabrielle and CFO Bree Greef. Welcome, Gabrielle and Bree, and congratulations on the FY25 results.
Thank you. It's good to be here.
Thanks.
So, Gabrielle, FY25 delivered the combination of 26% revenue growth, gross margin expansion, and lower costs relative to revenue, resulting in positive H2 EBITDA and cash flow. Can you continue this trend into FY26?
Yes, in FY26, we're expecting to grow our revenues above 20%, and that's really based on the potential that we see in our focus markets, so Asia Pacific, US, and parts of Europe, as well as the sectors that we're focusing on, such as mining, infrastructure, heavy manufacturing, fire services, just to name a few. In all of these sectors, there's a growing awareness for the need for respiratory protection, and that's really where we come in with our technology. Now, in terms of margins, we can continue to maintain and even improve our cost efficiencies to deliver those same levels of margins. And then we've had a lot of cost discipline over the last few years, and we're going to continue that. Now, we are going to balance that out in terms of making some investments for growth. But in the combination of all of these efforts and initiatives, we're very confident that we can achieve positive EBITDA and positive cash flow for FY26, allowing for some variation month to month.
And Bree, one of the standouts of the result was really the inventories declining by 21%, despite the 26% growth in sales. Was there a concerted focus on inventories, and can this be carried through into FY26?
Yes, certainly over the last 2 years, we've focused on reducing inventory levels and optimizing our working capital. As we move into FY26, we'll certainly continue with the strategy, ensuring we strike the right balance between managing inventory effectively and supporting our sales growth.
And Gabrielle, you've given guidance for gross margins in the mid-70s range in FY26. What underpins this guidance, and how important is the hardware consumables mix in delivering on this guidance? And I guess the second question on this is, do currency fluctuations have a role to play in that guidance?
Sure. So underpinning our margins, first of all, is pricing, mix, and efficiency improvements, which we'll continue to focus on, of course. Our accessories, as you might imagine, do attract a higher margin than our respirators or the hardware, as you say. So over time, as we grow our install base of respirators, we would expect to see a greater contribution of higher margin sales of our accessories or consumables. In terms of the currency impact, particularly against the US currency, there is some impact, as some of our components are paid for in US dollars. However, of course, we're growing a US business as well, which helps to protect us against that impact.
Just a little bit of a follow-on from that previous question, Gabrielle. If you're looking into your crystal ball, what would be the tipping point for accessories to become the main driver of revenue?
Yeah, so that's difficult to say exactly. And of course, we have different markets at different stages of tenure in terms of where we've been active in selling and marketing. And so will probably vary from region to region. What we've been really focused on, and where I think there's still so much more potential, is really selling the full kit, or the install base with the consumables or the accessories, etc. So it's difficult to say when the accessories will take over in terms of majority of the sales. But right now, I think what's really important is the install base and really growing our share in those focus markets and in those focus sectors.
Bree, you ended FY25 with an increased cash balance of 10.5 million. Can you expand upon how you're planning to reinvest surplus cash into the business, and what sort of ROI measures you use to measure the value you're creating in the business?
So over the next few years, we plan to invest strategically in sales, marketing, and R&D. Based on experience, we anticipate to see a return on investment on a sales investment in roughly 9 to 12 months. For R&D, we have a rigorous gate review process, enabling us to evaluate market opportunities, pricing strategies, customer needs, and the potential market share a new product could bring. Marketing and brand building efforts will include trade shows, sales enablement tools, and social media engagement. Our marketing approach is solution-driven and tailored to specific needs of each sector we serve. Additionally, we have begun leveraging our CRM system to track marketing ROI with a focus on lead generation and conversion.
And Gabrielle, with so much cash on the balance sheet, how are you thinking about M&A opportunities and the capital management initiatives within the business?
Look, I think the focus has been so much on becoming sustainably EBITDA and cash flow positive, and that's really what we want to demonstrate in FY26. But certainly, as we establish that track record, capital management initiatives that could include M&A certainly will become topics of greater focus for us.
And Gabrielle, just finally, what could we expect from product development in FY26? I mean, what's your key focus areas?
Sure. We have a variety of programs at the moment at different stages of development, and we have an R&D pipeline planned for the next several years, in fact. So our focus really is on developing our current technology. It's very innovative in the market, and it has opportunities for further development as we see it, so that we can meet more needs of the market, meet those opportunities of this growing PAPR market. And we're very confident, or quietly confident, that we'll be launching a new product before the end of FY26.
Well, thank you, Gabrielle and Bree, for taking the time to discuss CleanSpace Holdings FY25 results today. I'm looking forward to catching up with you over the course of the next 12 months to see how you're progressing.
Thank you very much.
Finola.